Today, Sino-US economic ties in the era of US tariffs. Hey everyone, I'm Jason Smith, originally from sunny California, now living in beautiful Beijing. Today's guest is Dr. Liang Yan, a professor of economics at Willamette University. Dr. Liang specializes in modern monetary theory, often MMT, the political economy of China, which I'm very interested in, economic development, and international economics. Welcome back to the Bridge to China, Dr. Liang.
Yeah, thank you for having me, Jason.
Well, I'm really curious. I think everyone is. The entire world is very curious about where the U.S. and China are in their periodic dialogues on the tariff war. There was a recent meeting between Chinese Vice Premier He Lifeng and U.S. Secretary of the Treasury Scott Bessent in Spain in mid-September. What do you know about what the two sides have agreed to thus far?
Well, I think, eventually these four rounds of talks in the past few months, right, are really trying to stabilize the trading relationships. As you know, that Trump started with this tariff war, through this Liberation Day tariffs. And China, of course, was slashed with, 34%, 33% of tariff. And since then, both sides basically escalated, right, the trade tension because China, of course, reciprocated by also imposing very high tariff on the United States. But then the two sides decided that, this kind of very destructive relationship is probably not a responsible way, nor a beneficial way to handle the relationships. And therefore, the two sides started to talk, right? They had a Geneva talk, they had a Stockholm, they had these London talk. And then finally, in September last month, they had these Madrid talk. So what eventually both sides decided is that they're going both roll back on those very high punitive tariff. And so the United States now is still keeping the 30% tariff on China, right? That's 10% with the so-called reciprocal tariff that the US pretty much just imposes on, over 140 countries in the world. Some are higher, but that's a baseline, 10%. And then 20% of the so-called fentanyl-related tariff on China. And China reciprocated with the 10% tariff. So now both sides are sort of at the stage where they are going to continue with the kinds of trade conversations. And the last talk really focused on the so-called TikTok deal, where basically Trump is trying to broker a kind of deal, allowing the American investors to take shares in the Chinese social platform, right, TikTok, with the parent company Douyin in China. So that was the focus of the last talk. And I want to say that things have, changed quite a bit. As you know, today, the Ministry of Commerce, where Thursday in the U.S. In the evening. But today, the Ministry of Commerce in China has issued several announcements pronounced that China is going to expand its rare earth metal ban. So these are, 56, 57, 58, 59, 61, and 62, these different announcements that basically eventually is to expand the export, ban on rare earth minerals, as well as the machines to process these minerals, this rare earths. As well as some export restrictions on high performance batteries and also materials that go into these batteries, as well as industrial diamonds and the cutting machines and so on and so forth. So I think again this was a response, I think a rightful response, from China's side to the U.S.'s escalations in the recent days, because on Tuesday, the U.S. House Committee on China basically argued to expand the tech ban, right, the chip ban. The idea now is to work with the allies to impose stricter export bans on these semiconductor chip machinery to China. The U.S. also put 16 Chinese firms on their entity list. And then today, news just came, they put another, I think, 20 Chinese firms again on that entity list. So we're seeing again escalation in that tech space, right? In that tech trade space. I think possibly in preparation for getting the leverage, perhaps, right, for the next trade negotiations when President Xi and Trump are likely to meet on the sideline of the APEC at the end of this month.
I recently heard rumors that, well, I guess it was the Wall Street Journal that said that China had offered $1 trillion in investments in return for normalizing of trade. This has not been confirmed on the Chinese side, and as far as I know, there are no Chinese sources confirming that this deal was offered. But do you think that if this was on the table, that the United States would seriously consider it, considering the fact that the US dollar has not been as strong as it has been in the past, and the U.S. needs more foreign investors to buy U.S. treasuries?
Right. Well, this 1 trillion investment, as the rumor goes, I don't think it's simply a purchase of the U.S. treasuries. It's more of China's overseas sort of foreign direct investment. So China may be interested in building bricks and mortar kind of factories or workshops in the United States, or have some mergers and acquisitions of some existing US firms. So I think that is more likely what China has in mind, because as you know, in the recent years and actually months, China has been diversifying from the U.S. treasuries. China's treasury holding had been declining, I think, after it reached the peak right around 2013-ish. And it has been declining. So right now, China is actually the third largest overseas holders of the U.S. treasuries, right, after Japan and the UK. So I don't think China is really interested in raking in more U.S. treasuries for all kinds of reasons, right? One is, of course, like you mentioned, right? The dollar has been weakening since Trump took office. In the last 6 months, it has depreciated by 10%, which is quite unprecedented in the past 50 years. The straight 6 month decline for 10%. So I think there is a currency risk if China is going to load up treasuries again. Not to mention, again, if you put too many eggs in one basket, right, you're putting too much of your foreign exchange reserves into the dollars. That is not in China's interest. It really exposed China to another vulnerabilities, right, to the U.S. monetary policies, fiscal policies, and so on and so forth. So I don't think that it's in China's interest. But I do think China has the interest of, investing abroad. And this is not only in the United States, of course. China has invested a lot in the global South countries, for instance, through Belt and Road, but also in other places like Europe, So I think there is a possibility, right, to have the kinds of investments into the United States. And I think the difficulty here, of course, is I don't think Trump really made up his mind just yet, right? On the one hand, he does want all these investments, right, that he keep boasting that has secured $9 trillion of investments from, all different countries, right? We don't have to be serious about the numbers. But on the one hand, he does want to attract those investments. He sees this as a win for the U.S. It's going to revitalize its manufacturing sector, create jobs, and so on and so forth. He sees this as a win. But at the same time, I think he has, and his cabinet, of course, has deep distrust in China. Obviously, they are not going to allow China to acquire any land or any sensitive sectors like tech or energy, for that matter, right? So, or no automobiles and airplanes, and all of these are the sectors that China might be interested, So I think here is really the I would say the difficult part, the challenging part is that even if China is willing to invest, right, what sectors the U.S. will be open to Chinese investment, and how to deal with a administration, right, that is so precarious, that changes minds every day, right? So I think that is really, I think, the challenging part.
As an economist, my question is, it does seem to me that I'm not an economist, firstly. I'm not even close. But it does seem to me that it would be to the U.S. benefit for Chinese investment to go into tech sectors like automobiles, to JV with GM or Ford, and to make factories in the United States with American workers to provide vehicles that have Chinese technology in America for American consumers, and maybe even for export as well. But it does seem, like you just said, precarious White House and the people that are advising the president, they don't want that for whatever reason, security ideas that it's not a good idea for security. However, in the 1990s, Japan came in and provided enormous amounts of jobs for the United States, and now China is in a similar position where it just has better technology. Chinese cars are better than U.S. cars, and they can be produced at more affordable rates, and a lot of the battery technology and other things are more advanced in China. Does it make sense, if we were to take the White House concerns aside, economically, for the United States to have Chinese investors come in and build factories in the United States to produce high-tech machinery for U.S. consumers?
Yeah, absolutely. I think that's why it's important for you to preface, right, that you're not a trained economist, because I think economics should be about common sense, right? And what you just said, I think, makes a lot of economic sense. It is true that Chinese investments will benefit the United States in terms of job creations, in terms of technological know-hows, in terms of fostering a more competitive environment. So then the US companies, right, will really get their act together and really invest and upgrade. However, I think really that, mindset of a zero-sum game, right, the security concern, the so-called security concern, of course, that is very much, I think, abused, right, to the extent that Trump, for example, imposing tariffs on furnitures and wood products in the name of national security concerns, right? And so you have to wonder, right, what really is the limit of the so-called security, right, national security concern? So I think, unfortunately, with all the economic benefits that the United States could, gain from China's investments, I think there is still tremendous pressure coming from the White House, depending on who you talk to, right? If you talk to Scott Bessent, he probably will say it's a good idea, right? China should come here and invest and create jobs for our people. But if you talk to people like Rubio or some other trade hawks in the White House, I think it will be a difficult proposition. Again, this idea that China is coming to wipe out our industries, it's going to take over our data, it's going to monopolize the market, and so on and so forth. I think the kinds of rhetoric and the kind of distrust will be very difficult for the U.S. to really open arm to welcome China's investments. Yeah.
You made a point about leverage earlier and the rare earth minerals, and it seems that, pardon me, it seems it's not actually the minerals necessarily, it's the processing of those minerals that is so important. And China has a 2 or 3 decade lead in that technology. The United States desperately needs those rare earth minerals for defense and for microprocessors and other technologies as well. Given that these are most advanced in China than any other place in the world, and that China is now withholding these, do you think that this will be enough leverage to bring the United States to the table to create a sound deal for both countries to coexist peacefully and trade?
Well, I mean, for a rational mind, I think definitely, right? You're absolutely right. These rare earths are actually not rare, right? But China does have about 50% of the deposits of these rare earths materials. And you're right, China is monopolizing pretty much in the rare earth processing industry, especially the so-called heavy rare earths, right? China is pretty much having over 90% of the market share in processing because China has been able to innovate and use the best technologies, right, that China is able to economize on the cost using plastic and some less expensive asset to go through the 100 different steps to be able to tear apart the different, rare earths. The difficulty, of course, as you know, is these things, they stick together in the nature. So it's very difficult to process them. And China has the technology. China has a scale of the production. And so that really puts China in this very much, a very advantageous position. And I think, this is decades of buildup. China started to really work on rare earth industry since the 1960s. And as you probably know, the former Vice Premier Wen Jiabao, he actually has a master's degree in the rare earth chemistry. So it's been really a high national priority, right? It's a strategic sector that China has been building up. And if you look around China today, there are about, I think, 36 different rare earth chemistry programs in the universities. None of this existed in the United States. So you're right. I think China does have a lot of advantages in this sector, and it will be very difficult for the United States to catch up, if any, if there's any political will, right, and economic might to actually do that. Because again, according to some of the industry experts in the United States, it takes about 29 years for them to be able to really open a mine, acquire licenses, and put everything, in order. Not to mention, this is not a very lucrative business, right? The market, revenues for some of these are, $5 billion a year. Compared to copper and others, they're much, much more profitable. So there's always the question about how the U.S. is able to put this together, right? If they do want to catch up on that rare earth space. So I think, if you have a rational mind, yes, you should come to the table, right, and really understand, what cards you have, right, using Donald Trump's own language. But you never know, right? I think from what we have seen so far, the White House has been doing a lot of things that's shooting on its own foot. The imposition of these tariffs, the trade ban, tariff ban, and so on and so forth. I think it's really not to the advantage of the United States. But Trump seemed to believe that he has the cards, and they keep doubling down, right, on these trade restrictions. Again, to the detriment to the United States. But I do think that, as you rightly point out, right, for the United States right now, they are in this position where they would need Chinese rare earths to be able to, for their military and civilian industries, especially in the tech industries. And this time around, I think the Ministry of Commerce also tightened the restrictions by a lot. So that really reduces the opportunity for the United States to get these rare earths from a third party. Which I think, they probably attempted to do so. But I think that this does give China some leverage on the negotiation table. And again, I think in a way, tit for tat or retaliation really produces lose-lose situation. I mean, China wants to have open trade. China does not want it to be like the United States, right? But unfortunately, I think in this scenario, China has no other alternative but to reciprocate, right? Because otherwise Trump is just gonna, be more aggressive, right, in its demands, in its trade aggressions. So I think, China has to do what it has to do.
It does seem like Trump's tariff war on the world is escalating. As of September 10th, Trump asked the EU to impose, I don't think it did so, 100% tariffs on China and India. What do you think Europe's position is in all of this? Does Europe want to continue trade with China? Is Europe likely to acquiesce to the United States' demands?
Well, I think, again, if EU has any rational minds, right, they should really see their position right now, right? There's no, again, for EU, given that they have been so much reliant on the US markets, but right now, Trump is pretty much taking all this unilateral approach, right? I think EU is really stuck in this position. I do think for economic benefits, for its own economic autonomy, right, and for strategic autonomy, EU needs to have their own independent policy making and think about what really works for them. So as far as the trade is concerned, I absolutely think that EU should work with China. Because China has a lot of potential, right, in terms of both importing products from EU, but also cooperate on the automobile fronts and other, potential tech areas. So, I think it is in EU's interest. They see China with a very deep, again, distrust and skepticism, but I think they have been really under the US's directive, or really listen to the United States and do what US demands them to do for too long. And I think that is really to their own disadvantage, right? This example of imposing high tariffs on China and India, it's pretty much will cut off the market access for EU or any kind of cooperative relationships, right, with China, which I think EU really needs to be able to expand its market, to acquire certain technologies, and also to be able to just innovate, right? To get some Chinese technologies to compete and cooperate on the automobile sector, for instance, and green energies, right? Let's not forget, even though Trump is pretty much walked back on any of the climate commitment, EU didn't. So they need to find the opportunity to overcome all these prejudices and biases and resisted pressures from the United States to really find the right path for themselves. I think EU has been stagnating economically. And security-wise, I think they're also, seeing now the bitter, severance, right, from the United States. I think for too long, again, they just, do whatever the U.S. Asked them to do. So I think if again the rational mind trumps in the EU policymaking circle, they should rethink twice and go the opposite way as the United States wants them to do.
Pardon me again. The beginning of this year, there were a lot of predictions in the U.S. and the West generally that China would be begging for a deal as soon as Trump began this tariffs on China, but also the rest of the world. But how is China's economy actually doing today? How has it been doing this year? What do you your forecast for the year?
Right. So again, this just shows, arrogance and ignorance, right? I think on the United States part to think that China will come back and beg for, a trade deal. I mean, the reality simply pointed that, so far this year, China's exports in dollar terms has gone up by 6%. And China is recording, again, record high trade surplus. The projection is China is going to have $1.2 trillion of trade surplus by the end of this year, according to Bloomberg's projection. So yes, China's exports to the United States have declined quite a bit, but it's more than offset by China's exports to other places in the world, right? This is Southeast Asia, Europe, South America or Africa. So we're seeing everywhere, but the United States, right, has seen higher China exports. And some of these are the so-called transshipment, right, that some of the Chinese goods are shipped to the third country, but then the country will transship that to the United States. But this is not the whole story. I think people at the RAND has done some, taking apart the numbers and looking at the sub-industry level and find that only about 20% of all these increases in China's exports to non-US markets are some so-called transshipments. But the 80% are simply because there's a higher demand. There's a rising demand for China's exports from all these different countries. So I think that just attests to the fact that, China is able to weather through this kinds of trade war. China's trade remains very competitive, right? It has diversified a lot in terms of the trading partners, and it's able to upgrade its trade structures, right? Right now, when you look at the trade structures, 60% of China's exports are those electrical and electronic machineries and products and so on and so forth. They're high quality, low cost, and they're very complete in terms of product line. So I think that just makes China's exports very competitive, and there's a lot of demand for these products. And at the same time, I think China has been trying to boost their domestic demand as well. I mean, so far, I think the retail sales have been growing, in the way that I think it's acceptable pace, given all this current economic adjustments in the real estate sector, so on and so forth. But I do think the investment aspects, right? The investment side of China could still see a little bit more, momentum, could see a little bit more boost. Because so far, I think this year so far, the fixed asset investments in China is about 0.5% increase year on year. Compared to last year, it was 3.2%. So what that means is that there's still room for China to boost its domestic demand. And I think that, on the one hand, China is doing well on trade. On the other hand, China is going to bolster its domestic demand, both as a way to boost economic growth, but also as a way to enhance the living standards in China. So I think all of this would make China really compete, right, with the United States from a position of strength. I think the economy is doing well compared to the United States. I think, the economy is really, I think in a very precarious position right now in the United States, right? The job market has been slowing down, low hire, low fire environment. A lot of the young people are struggling to find jobs. And, Jay Powell admitted that, right? And said this is a nightmare for the young people. Inflation is likely to escalate, but we're now shooting the dark because the government has shut down. So a lot of economic data are going to be delayed or even not being able to release. And all these arguments about the U.S. is going to improve its trade balance, we're not seeing that. I mean, as a matter of fact, the U.S. trade deficit has widened by 27% year on year in the first half of this year compared to last year. So trade deficit is not going away. Manufacturing sector, it has not been revived. The manufacturing sector actually has lost 30,000 jobs so far this year. So again, the scorecard for Trump's trade war is really dismal, I think, for the United States at this point.
Well, one of the goals espoused by pundits in the United States of Trump's trade war was that the United States would take countries that are currently trading with China and edge them away and towards the United States. So what effect are U.S. tariffs having on China's regional partners in ASEAN, Japan, and Korea?
Well, again, I think that's wishful thinking. If you just look at the number, right, that China's trade with Southeast Asia economies have actually gone up by a lot this year. I think, in the neighborhood of 18-20%. So I think it's wishful thinking that somehow Trump can nudge these countries to cut ties with China. I think there are many reasons for why this is not going to work, right? For one is there is a very integrated regional supply chain. When you think about, China is accounting for about 30% of Vietnam's imports. And we're talking about industrial machineries. We're talking about industrial immediate goods that Vietnam needs to actually power their own manufacturing sector. China's investments in various regions are also very important, right, by providing infrastructure and energies and utilities and so on and so forth. So I think, many countries see China as a reliable trading partner. So why would they abandon, right, this very fruitful and positive relationship with China and side with the United States, which proven to be very unreliable trading partner so far, right? Doesn't matter your friends or your foes, you are being imposed with high tariffs with all kinds of weird reasons, right? Weird excuses, right? National security, or, I just don't like you to prosecute a political ally, or whatever, right? So, or buying Russian oil, which, by the way, they actually encouraged, India to buy Russian oil, during the Biden administration, as long as they keep the price at $60 per barrel or below. So it's just very unreliable, very hypocritical in terms of how, the U.S. weaponized the trading relationships. So I think the more the United States wanted to force countries to pick side, I think the more countries would actually try to, build this alternative trading relationships and pivot away from the U.S. orbit.
When I talk to people in the United States, or I look at a lot of data from Gallup and Pew, Americans are extremely concerned with inflation because the last few years we had almost 10% inflation at some points in time, but inflation has come down a little bit. But it seems like because of the tariff war, we may be about to see very high inflation again. Is it likely to worsen in the coming months or couple of years owing to the tariff war?
Yeah, I think so. I think if you look at the numbers, again, we're seeing still relatively mild inflation at this point in the United States. Even though, again, looking at the individual product lines, you will see, different scenarios. For example, when it comes to furniture or housing appliances, especially furniture, I think that has gone up by a lot. I think the number that I saw was about 75% increase in prices. And there are other materials that basically you see the price rise twice as much as the CPI increases. So those are the sectors that are mostly affected by the tariff, right? Then the sectors that are not affected directly by the tariff. So, we are already in a period where the US is pausing, right, its high tariff with China. Remember, we still have this trade negotiations going on. It's still in this tariff pause period. And the US, of course, is also in the sort of trade pause, a tariff pause with Mexico, right? And with Canada, they also roll back a lot in terms of the certain products. And also with EU, they de-escalate, for example, on the tariff on automobiles, right? Previously was 25% was touted, now it's 15%. So we are already in the sort of milder tariff environment. So you could only imagine, right, if the trade talks with China falls apart or with Mexico falls apart, then we're likely to see even more tariff. But even in the current relatively mild tariff environment, we're already seeing, a lot of product, prices are increasing. And this could only get worse. Why? Because we know the first half of this year, especially the first quarter of this year, the US importers have really front-loaded a lot of the inventories before the tariff, go in place. And the inventory will eventually, finished, right? And so by that time, and then you have this new waves of tariff, you're very likely to see the price to go up. So that's number one. So, the inventory will be exhausted. Then when these importers restock, they would have a new price, right? That would fit into their prices. Number two is some of the early evidence, I think, again, by, I believe it's the Goldman Sachs, they have shown that the retailers and the businesses, importers, they are pretty much eat up a lot of these costs so far. Over 50 or 60% of the tariff costs were absorbed by the importers so far, right? Less than 20% are passed down to the consumers. But that's not going to last forever, right? Businesses have their bottom line. They are going to adjust the price upwards at some point. So again, according to Goldman Sachs, the price is going to be passed on. The costs are going to be passed on to the consumers gradually, right? Towards the end of this year, then the consumers probably will shoulder at least over 60% of these cost increase, and then the importers are going to absorb another 15 to 20%. So the U.S. is going to absorb at least 85-90% of these increase in tariffs. So that's the time where you would likely to see more price increases. So this is not going to be a sort of a sudden jump in prices, but it will trickle into the entire price systems. And so I think that is really problematic, and it's very concerning, I think, for especially middle or lower income families, right, that rely a lot on these imports.
I want to point out I'm not an economist. But a lot of economists in the West use a Western rubric to analyze China's economy. It doesn't always seem that it's accurate. So a lot of Western economists are signaling that there's a crisis in China because inflation is close to zero and has been close to zero for quite some time. Me, as a simple consumer, I go to the store. What groceries cost this year, they cost last year and the year before. I'm happy. I don't really see the problem. Is there a problem?
Yeah. Well, I mean, in general, economists are very concerned about deflation. The reason for that is because deflation tends to postpone decisions of consumption and investment. So, for example, if you are a consumer, if you have a big ticket item to purchase, let's say a flat screen TV or a robot to clean your floor, if you think the price is going to continue to go down, right, next year it's going to be 20% less than this year, then you might likely to postpone your purchase decision. Same with an investor. If you think the machinery is going to cost you 10% less, if you just wait a month, then you are likely to postpone the purchase decision. So that means you are going to have suppressed demand because of this kinds of deflationary trend. Now, I want to say that, first of all, in China, we're not really seeing the kinds of deflationary pressure similar to the 1930s in the United States due to a very large decline, right? A simply collapse in demand, both consumer and investor demand. I think right now in China, and you rightly point out, the inflation rate is relatively low, right? August, the general CPI is negative 0.4%. But if you take away food and energy prices, because those are too volatile, then the core CPI is 0.8%. So that is not deflation. Let's first make that straight, right? This is disinflation. It's relatively low, mild inflation, but it's not deflation. And second, I think what would really be comparable case for China right now, it's not 1930s Great Depression in the United States. It's more like in the 1870s to 1890s, when there is a very large wave of technological innovations and very large increase in expansion in the supply. So I think what's happening in China right now is because of these technological innovations, the new economies, you are seeing very rapid expansion in production, right? So you're seeing, EVs, for example. Xiaomi is now able to produce an EV in 76 seconds, right? Using their fully automated factory, right? So you see this tremendous increase in production, and then demand is relatively slower to ratchet up, to absorb these, tremendous industrial output. So that is where you start to see the price falling, right? Not due to a collapse in demand, but due to a rapid expansion in supply, right? So usually what I tell my students is that if you think about supply and demand side, right, is the shift of the supply, not the backward shift in the demand. And then I think, does that impose a problem? Well, first of all, it's not going to be as severe a problem like in the 1930s, right? It's not a downward spiral and so on and so forth. On the other hand, I think in the long term, we do want industrial producers to generate certain amounts of profits, right? To cover the bottom line so they can have some accumulations, they're able to continue to innovate and expand. So I think that's exactly what Chinese government is doing right now, as you know, is to launch these anti-involution campaign, right? Is to use regulations to limit the kind of cutthroat price competition, to also at the same time roll back or phase out some of the outdated production. So for example, some of the heavy polluting steel manufacturing or some other, building materials when China don't need so much, right? Cement, for example. So this anti-involution campaign is to address this problem that we have certain sectors, right, that have expanded too much. The demand does not catch up, and it's not likely to catch up in the near future. And so the industry is under the stress of making, negative profits. So that has been rolled out, and the early evidence has shown it has been really successful. If you look at last month, the industrial profit has gone up by 20% year on year, which is really a record number. So I think, the Chinese government is aware of, these kinds of issues, right? That they're trying to boost domestic demand, as you're also well aware in China, right? There's a lot of, 1补贴, there's a lot of subsidies on consumption, there are a lot of efforts to promote service consumption and so on and so forth. And again, the evidence from this, Golden Week, we have seen quite solid improvements, right, in travel numbers, in retail sales, 5.6% of travel increase year by year. Retail sales gone up by, 3.3% just for the first half of this Golden Week. So, and the government is doing anti-involution. I think all of these efforts are going to help to arrest, the downfall of the prices in certain sectors. And for the industrial producers.
That's a very thorough answer. Thank you so much. I personally learned a lot from that. A lot of people, including myself, even though I've studied it a lot, want to understand the role of SOEs in China's economy. And, the United States used to have utilities, and it doesn't really anymore because everything's been privatized. Could you explain a little bit about what SOEs do in China's economy? What benefits do they have for China's economy?
Right. Well, Chinese SOEs are really essential. I want to say that they are actually the backbone of the economic ecosystem. China's model is very unique, and I think that is what China has a lot of advantages in its economic model, right? It's this very symbiotic, very good synergies between the state and the market, right? In the West world, we always talk about market should reign. The government should just step in to correct the so-called market failure. China does not follow the same kind of model, right? China believes that the state and the market could both play very pivotal role. And in China, the SOEs are mostly in some of the very fundamental sectors, such as the financial sector, right? Make sure that there is sufficient credit flow in the economy to support, entrepreneurial undertakings. They're in the utility sector, like you said, right? The China grid, to be able to provide, very essential utilities like very affordable and accessible and reliable electricity. You have all these transportation infrastructure that are also controlled by China Railway and airline companies and so on and so forth, and also telecommunications, right? That again is really what is essential for the digital economy. So the SOEs occupy all these very important, economic backbone. And why it's important for this? Well, it's because the SOEs don't see profit as their ultimate, objective, right? Unlike in the capitalist economy, corporations are meant to profit maximize, right? And so you see how this could create problems for the United States, as you mentioned, utility, right? Unreliable, expensive, and so on and so forth. Not to mention, many of the companies, in order to maximize the profits, instead of investing in their labor force, investing in their real know-how, investing in the productive capacities, what they do is to do stock buybacks, because that helped to boost their share prices, and that would benefit their shareholders and their managers, right? So they basically undercut their own, industrial capacity by being highly financialized. All they do is trying to maximize shareholder values at the expense of their actual investments in the industrial capacity and the human resources. So I think China is having a different model. These SOEs, right? Many of them are actually profitable by the nature, the narrow matrix of profitability. But that is really not the point, right? The point is not whether or not these companies can make money for their shareholders. The question is, do these companies really work at the macro level, right, to provide essential goods and services for the economy, and lay the foundation, right, for technologies, for telecommunication, for digital, for utility, and so on and so forth. So I think that is why these SOEs are very essential. Now, can these SOEs improve the efficiency? Absolutely. Now, that is a corporate governance issue. So these companies can definitely give in the incentives, they can have better management, they can, improve their narrow definition of efficiency, right, and be less bureaucratic, for example. But should we privatize them so that they can all out for profit driven? No, that would not be a good solution for these SOEs. So that's why I think decades after decades, there are many IMF, World Bank, or all these other international organizations keep pushing China to say, hey, you need to marketize, you need to privatize. What does China do? Well, China basically throw off, right, all these so-called advice, because it's not in China's interest. I do think that, these companies, right, these SOEs, they're playing such a fundamental long-term strategic value in China's economic system. And I think, they absolutely need to be maintained and improved.
Wow, that makes a lot of sense, actually. I always think about it from a factory point of view. If I'm a factory in the United States, which is something that Trump wants to bring back, more manufacturing, if I have to buy my energy, my logistics, my telecommunications, my water, and my minerals from private companies, then I have to provide not just the service, but also the profitability of all of those companies. And that lowers the margin by which I can be successful as a manufacturer in the United States. Whereas in China, all of those fields I just mentioned are mostly controlled by state-owned enterprises. And so water is cheaper, electricity is cheaper, mineral inputs are cheaper, logistics are cheaper, and telecommunications are cheaper. So it seems to me, as someone just looking at this casually, a normal person, a layman to economics, that factories would be in manufacturing would have a better chance of surviving in China rather than in the United States. I kind of think the United States should take some cues from China and, bring back utilities so that manufacturing has a better chance of surviving in the United States. Do you think that Let's forget the possibility of it happening because the ideology in the United States is such that that would never happen, and not in our lifetimes. But do you think that that could work for U.S. manufacturers to have some essential services provided as a utility?
Right. Well, I think you're right. I think this is a ideology, as you just rightly point out, right? This idea that somehow the state-owned companies are going to compete with the private companies and, to the jeopardy of the latter. But I think you just very nicely illustrated that actually, with all these essential goods and services provided by these SOEs, it actually helped to lower the cost and improve the reliability, right, of the supply of these goods and services. And so that is actually helping the private sector to thrive. So if you ask me, yes, I absolutely think the US should rethink about their economic models. But again, I don't think that giving the very entrenched, right, both in terms of the ideology, but also vested interest, right, that there are financial investors that want to see these companies remain in the private hand so that they would pursue profit maximization quarter by quarter, right? They want these financial institutions to be, again, to just generate profits for private owners. So I'm not seeing how the United States will be able to change that, right? Not to mention, again, this whole idea of using trade and using tariff as a protection to revitalize the industry sector is a wishful thinking when you don't have all these other pieces together, when you don't build a system, right, that would be strategic to support your manufacturing sector, right? Just look at the Trump's policy when it comes to green energy, right? When you think about how, for example, AI is such a big monster when it comes to energy consumption, yet the United States solution to that is to walk back on renewable energies, but to continue to rely on fossil fuel, as we all know, that eventually will run out, right? And will become more and more difficult and more costly to extract and to process. So I think, from the energy prices, energy infrastructure to the human, aspect, the human resources aspect, I think the United States is really walking back on revitalizing its manufacturing sector. Just look at the H-1B visa, right? Now it's costing $100,000 to obtain a H-1B. And as you know, the tech sector relies so much on immigrants, right? Immigrant talents. So essentially what you're saying is that, no, we are not going to allow, these talents to come to the United States to contribute to the tech sector. And we're not going to provide this renewable, cost-effective and reliable green energy for the AI sector. So things just don't add up, right? When you think about, not having all these important, essential pieces to support your infrastructure, to support your manufacturing, facility, it's not going to work, even if you sort of try to protect your markets. Because if you protect, that even reduce the incentives, right, for further innovations, right? Look at the US's automobile sector. It's, they used to have 70, 80% of the market share. Now it's down to 40%, and it would go even lower because they simply cannot compete, right, on these very much more effective, new energy vehicles and so on and so forth.
I want to talk about solar for a minute. It keeps coming up briefly in our conversation. The United States has accused formerly China of overcapacity, but it seems like the developing world, especially, is eager to absorb China's solar exports, and it also seems to be really helping their economies. And if you have a renewable energy source, you're no longer reliant on, importing fossil fuels. So you become more economically independent. What are your thoughts? Does it really have a problem with overcapacity, or is this something that the world needs right now?
There's no overcapacity whatsoever in these kinds of green products, in green technologies, right? That is completely nonsense. I think for the United States, of course, again, they decided to go back to the energy of the past, right, instead of the energy of the future. They cannot compete on the renewable energies. And so that's why they're accusing China for producing too much these green energies. But as you rightly point out, as long as the world needs energy, then the green renewable energies will never be over capacity, right? Because it's simply needed. So yes, I think on the one hand, China's vast manufacturing capacity was able to bring down the solar panel price by 85% in the past 2 decades. And so what that does is really provide a cost-effective green energy solution for many of the global South countries, right? Look at Africa, right? This is a continent that has a lot of opportunity to develop a solar energy, right? And yet, many of the population, I think 60% of the African population, right, over 6 million population out of 1.2, 1.3, they don't have reliable electricity, right? I was in Ethiopia. I was in Addis for a few days, for about a week. Every day there were 2 or 3 times of breakouts. So when you have a scenario like that, right, if you want to industrialize, you need this kind of reliable electricity. You need this energy, right? So I think that it's important to understand that China, by bringing down the cost of these green energy solutions, it really help developing countries to secure their energy, right, and to industrialize. I think so. That's why I think this whole idea of China manufacturing, solar panel and allow these low carbon technology to be exported to other countries. I think that is definitely a boon for the rest of the world. And there are research papers that are published by my colleagues in the Global Development Policy Center that actually show China's export of low carbon technology has statistically significant for other countries to lower their carbon emission. So you get energy security on the one hand, you get lower carbon emission on the other hand. So I think that is a great success, I think, in terms of that undertaking. Also, not to mention, I think China through Belt and Road, right? Especially in recent years, since 2022, China stopped financing overseas coal-fired power plants, right? Now China's investment in the energy space is mostly green energies. And so that again helped many countries to build their solar farms, to build, dams, to build, wind farms. And all this helped these countries also to, have reliable, cost-effective renewable energies. So I think, again, this whole, so-called overcapacity is completely nonsense. And I think that is specifically driven by certain political agenda.
Mm. Well, I just want to kind of ask, given that U.S. policy is to tariff the world and also China specifically, is there a better way? What would work for the United States economy in terms of trade with China? How can increased trade with China benefit the United States economy?
Well, I think that's an excellent question. I think, first of all, whether or not there is a better way, I think the United States has gained a lot through these trading relationships. I think this whole idea that the US somehow is a victim of global trade, especially trade with China, again, it is driven by specific political agenda to appeal, right, to the MAGA group. Because we know that in the past few decades, the United States were able to import, $1 trillion worth to run a trade surplus, meaning that they import more than they export, to the effect of $1 trillion per year. At least that was last year, 2024. What that means is that the United States is enjoying all the goods and services supplied by the rest of the world, right? China included. So they're getting the real benefits, right, from trade. And not to mention many of the transnational corporations, right, headquartered in the United States, they have been able to rake in billions of dollars of profits. So in that sense, the U.S. is gaining from these trading relationships. Now, the problem, I think, for the United States, again, is the benefits of trade are not distributed evenly, but the costs of a trade are concentrated on the Rust Belt cities and the people who used to rely on, automobile production or furniture production or any of these manufacturing products, right? But as we know, the U.S.'s manufacturing sector has declined, right, really since the 1970s. In terms of the share of the employment, it peaked in the 60s. And in terms of the actual number of manufacturing jobs, that peaked in the 70s. And that has been going down because automation and because the companies profit-driven motives by shipping the production abroad. So it wasn't necessarily trade that created this industrial hollow out, so to speak. I think the US really needs to have some kind of soul searching, right? And really see what create the kinds of industrial hollow out. It's mostly, again, because of financialization, because the financial interest trumped over, the interest of developing your manufacturing capacity. So whether or not there's a better way, yes. For one is you want to bring in your financial interests. You want to make sure that you are developing industrial capacity, your competitiveness, that is not purely for profit-driven purposes. Because otherwise, again, you would use all your profits to do stock buybacks or to do financial engineering instead of really to develop your industry. Same with your human resources, right? The best, the brightest, as Paul Volcker used to say, this brain drain, right? The best students go to the Wall Street, right? They don't go to the manufacturing or go to the tech. So that is the problem that I think a fundamental problem for the United States. The second thing I think the US has to do is really to compensate the losers, right? As in economics, when we talk about trade, we talk about, trade could produce a lot of the benefits, but unfortunately also produce costs, right? Some of the sectors that are being displaced, the workers need to have a retraining program. They need to move on to a new sector and they need to be reskilled and so on and so forth. So I think that is exactly what the United States need to do, right? Revitalize their manufacturing, industrial capacity in the real sense, right? Not in the disguised, again, some populism slogan way. And second is to redistribute and make sure that, whoever that get affected negatively by trade will be compensated for by that, and to be able to find a new way to be re-engaged, right, in the economy.
I have a last question. I like to ask people who are living in the United States this because I don't get back often. I've been living here in China for 13 and a half years. What is it like in 2025 in terms of the perspective that people have on China? There was, for example, the beginning of this year and the end of last year, a Xiaohongshu kind of revolution where lots of Americans went on Chinese social media platforms and began engaging in discussions with Chinese people across the Pacific, which I encourage more people to do. And there's a rush of global tourists from all over the world coming to China. There was a dramatic uptick, I think more than 50% increase year on year of tourists from all over the world coming to China. Are regular Americans beginning to see China in a new light, or how do things actually look?
Well, I think as anything in the United States, right, the views on China are very much bifurcated, right, are very divided. Depends on where you are. So I live in Portland, Oregon. So as you probably know, this is a beautiful place and it's very blue state. And I live in the metropolitan area, and people are, progressive, they're liberal, they tend to not to be bought into some of these very demonizing narrative about China. And especially I teach in a liberal arts college, and many young people, they understand China much better than what is being, shown on Fox News. So I think, at least the circle that I lived in, I think people are open-minded, right? They see China as a country that is growing, right? That is modernizing. They're also very much attracted to the Chinese culture. Many of my friends, American friends, right, who are, American-born friends, I should say, they had the chance to travel to China, and they came back amazed, right, by the infrastructure, by the rich culture, by the food, by the friendly people, and so on and so forth. And of course, like you said, many of my students and people that I know, they have access to the red nose. They are on TikTok. They are, again, fascinated by, cities like Chongqing, right, or Beijing, right, the fast speed train, the high-rise buildings, the solar farms, and, and of course, young people these days are also into Labubu, right, another sort of Chinese cultural export. So I think at least the place where I am right now, I think there are a lot of understanding of China, right? Understanding China both for the good parts and also for the competition part, right? It's no doubt that they are concerned, right? That this rising country that is so formidable in its competitiveness and are they going to eat our lunch, right? I do see that kind of a concern, but they're not in a way fear China to, in a way that see China in a very evil light, right? To see whatever China does is trying to, defeat the U.S. or to try to, just suppressive regimes and whatever that that Fox News would like for you to believe. But that said, I also think that in places that outside of these blue states, right, that you definitely have people who are much more hostile to China these days, believing the narrative coming out from the White House and that somehow China is the culprit for the fundamental crises in the United States or the lack of jobs or income and so on and so forth. So I think it's very divided in the U.S. right now, and I definitely think that with China's open door policies in terms of tourism and visa-free policies, and we still have the 10-year visa with the United States, right? So I think it will be helpful for the people-to-people exchange to be more, to really grow, for people to really see in their own eyes, right, for what China is. And so hopefully that would help to reduce some of these hostility. And I think that could go a long way to rebuild the relationship. But I think right now, again, things are divided and trade front has been, getting more tense. So we'll have to see what happened, right, at the end of this month at the APEC summit sideline.
Amazing insights on the economy and society. Thank you so much for your time, Dr. Liang.
Well, thank you for having me again. It has been a pleasure.